Okay, give me 1 second. Share the screen and stuff. Okay, I don't know how to get rid of this thing on the side. Remove from stage. Wait, what do you guys see over here? Hide vertical. Oh, here we go. Okay. Sorry. Here we go. Share screen. Okay, 2 minutes. We got 2 minutes. Okay, here we go. Weekly Wisdom stream for FOMC. This is big. What's up, Moose? Love you too, brother. Good to see you. Good times in Miami. How do I get rid of this? Okay, let's get it out there. I don't know how to get rid of this. Okay, here we go. We got people coming in. Stream has begun. We're about to get dot plots in 2 minutes. Big stream. This is a big one. So let me just put this out.
Sure. I mean, just since you're super healthy, but you also don't even need this test, right? I mean, we can hear Pat Hammock.
Okay, we got 1 more minute. Okay. Great to be back, brother. Great to be back. It's been a long time. All right, we got stuff's pretty flat over here right now. I know crypto was pumping a bit, but otherwise, we're pretty flat. Okay, let's just kind of keep an eye on the rate markets. We should have a 25 basis point cut. There we go. It probably was just announced. Let's see. Okay, let's see what we got on in terms of. Let me see what they're saying in terms of the dot plot. Give me 1 second. Pull it up, and let me go through it. Dot plot. Here we go. Give me 1 second. Okay, here we go. No major. We're seeing a little movement. No major. Couple of knee-jerk reactions. Nothing major. Give me 1 second. I'm just trying to go through the dot plot and whatnot. Okay. Okay, we got 25 basis point cut. That was expected. I just want to see what the dot plot stuff was. Give me a second. I mean, the expectations are fine. Okay. The speech at 2:30. Seeing if there's anything in the slash of 3.75% in their statement. I'm just trying to see if there's any breakdown here. September median forecast for 2026. Ooh, that's not great. The September median forecast for 2026 is held at 3.4%. Not great, but let me look through a little bit more. Okay. Dot plot. So Fed fund projections on the dot plot 2026. They're saying they're going to be mostly flat 2026. That's weird. I don't get it. I'm going to have to dig into this a little bit more. Look, rate markets are just up and down right here, just kind of like big up down action. I just want to go through the statement a little bit more. So 2025, yeah, 25 basis points, a 3.625 rate. 2026, they're basically just saying like, one cut for all of 2026, one cut for 27, one cut for 28. That doesn't, and then 3% long term rate. That doesn't sound great. But that also could be a function of we're going to have a new Fed president. So, um, maybe that's why they're not really saying much. So basically we're gonna get maybe one more cut with Powell, and then we have the new Fed president. It's possible that that's what it is. um but 3.4% stable is not great. Still gradual path dependency, CPI data dependency. um yeah, it's not great. It's not great. I'll tell you that. Uh, I wouldn't really be playing off this number too much. I think we're gonna have to wait for um, the conference in 30 minutes. Right now, just looking off this, it's kind of strange because he will, Powell's saying that he's going to cut maybe one time before he leaves, but he's keeping it steady for all year. But you have the new Fed president that's going to come in I think March next year, and maybe he'll come out and be like, "Listen, we're coming to like cut, cut, cut." So it's possible Trump just makes him. So even if Powell gives like a very hawkish speech, like this statement was hawkish, which you're kind of seeing it in the market. Um, you're seeing big move on rate market, but you're seeing kind of coincidental the Dartmouth candle. Stocks seem to be kind of whatever, no major. Yeah, kind of bullish on stocks. I guess the fact that they think that Powell will cut at least once more before he leaves is kind of being taken as bullish. I mean, you want to see this number go down, which is good. You're seeing the 2 year notes, 2 year rate going down, seeing stocks move up. Bitcoin's legging down again. This is you would think it would move up with stocks. Like this going down should make Bitcoin go up. Let's take a look at gold. Yeah, gold's moving up. See, stocks moving up, gold's moving up. I don't get why Bitcoin's moving down. Rates moving down. So these are supposed to be inversely correlated. So that's good. Um, let's take a look at some of the smaller coins. Yeah, just crypto is very interesting. I thought crypto would just fucking go. Like I didn't think like look, this thing Nasdaq looks like it's getting ready for a leg up. Whereas crypto looks like a little bit dicey. Very, very strange. Well, I guess yeah, there has been. It's a good point. There has been a big decorrelation between um, stocks and crypto. So maybe that's part of the play here. Um, we'll have to wait for the Q&A and the conference how he talks. But just off this alone, if Powell was not being replaced next year, I would say this was kind of bearish because that means he's only looking at one cut for all of 2026. But I think basically what this dot plot means is that he's looking for one cut before he leaves, which is going to be like January. He's leaving in March. So maybe that January cut. So we got this December cut. We're going to get January cut. But I think during his speech, we'll get just more of the same that, a lot of data dependency, a lot of just waiting for the markets. We'll probably get questions about the next Fed. I don't think he's going to talk much about that. I think we're going to get more of the same. But the fact that he's going to give us one more cut before he leaves could be bullish, and maybe that's why market's reacting. That's why it kind of surprises me. I think if that's the case, crypto could be underpriced here and could be like a nice scalp long. Um, I might take that. I might take that bet, but it's you'll see a lot of up and down between now and 3 p.m. Like because he's gonna start speaking at 2:30, so we'll see a lot of bounce around back and forth for the next little while. But you could take some, maybe could take some degen bets on dips, maybe a long Bitcoin bet. Let's see. I might try. Oh, May. Yeah, that's right. My bad. That was March. Whatever. Mid year. Basically, we'll get one cut at least while Powell's around. Ideally two. That'd be perfect. And then you have the new Fed come in, who's like just ready to go essentially. So I'll take a little Santa rally bet here. Why not? I don't see why Powell's gonna come and just destroy the market ahead. Um, maybe I'll take a 55 IBIT, same as longing Bitcoin basically. Just a scalp trade. I'm just gonna put that trade on. Just putting that on. A couple of call options on IBIT. I'll just do that. Feel like that could be some move over here. Um, do a little market buy. Let's see. Why not? Took a little market buy, bought 10 G's worth of weeklies. If you can see right here. Just so you guys see it. There's no bullshit here. 10 G's off 1 week Bitcoin options. Just taking a bet. Just honestly, I'm most likely, I mean, I like the fact that rates are moving down here. We will take, I mean, I think market's going to take a lot of profits if we pump because everything's up. So net, I still think we're going lower, unfortunately. But I'm just trying to take a little gamble over here. Why not? Trying to have a little fun. Look at gold pumping. Oh my God, look at that. That really says something. I mean, gold might break back out at this rate. Holy shit. Rates are taking a nice. I want to see rates just break down. Like I want to see come down here. Like that's like I want to see way lower on rates. Like I want to see a breakdown here. So like 3.5 needs to break easy. But 3.4, like let's get there. Then we're gonna have some real fun. But we'll see. I mean, like I said, my base case was we're gonna see a Santa rally, and then we'll dump into end of the year, and then we'll see a little bit for pump early Jan, and then February is just gonna be, unless you see some rates inflation data points. Otherwise, I don't see anything great happening on the horizon anytime soon. Little wreck trip. Um, But yeah, we gotta wait at this point. Listen, yeah, like stocks are all time highs, small caps all time high. It's dicey, but I took a long bet on Bitcoin. We'll see how it goes. Um, maybe we win, maybe we don't, but just taking a little gambit. All right, we're up. Those options, longs are printing. Options are printing. All right, let's go. Uh, When I'm gonna fix that too? It's in the works. It takes a little while. I've started the process though. All right, our longs are printing. That's good. Make sure I put it in my chat, weekly wisdom chat. Just let my chat know. Okay, we just gotta wait till 2:30 now. So 10, 15 minutes. Maybe I can we can play some. We can get. I mean, if you guys have questions, go for it. Okay. Why not take both sides? Because that would be a volatility play, which could work too. But that's I'm just trying to scalp long here, which is it's printing really well. That's printing. I'll probably close it right before maybe Powell starts talking, or let's see. We'll just see. I've been looking for like an entry. I thought we'd hit at least 88K before Powell started talking, but didn't. Okay, our long Bitcoin's up. Little scalp trade. Okay, give me 2 minutes. I'm gonna bring a drink. Parched. But we have till two. We have 15 minutes or 20 minutes till Powell starts talking. If you have questions, just drop the questions. Guys in Weekly Wisdom Money Glitch, you guys get priority for questions. So drop your questions and I'll answer them. Give me 2 minutes. I'll be right back. All right, do you got any questions? Oh shit, our longs are printing 93K. All right, look at gold. Gold really put up a little spike there, eh? Back down. Let's see. Let's watch. I mean, there was just a scalp trade on. Oh, can you not hear me? Can you guys not hear? Can you guys not hear me? Okay. All right, you guys got any? Yeah, that's gonna go up. This. Yeah, I gotta still put it up. Yeah, wait. Let's see. Maybe. What is it? Best thing right there. But then maybe like right here. Does that look cool? I don't know. We'll see. For now, we'll keep it here. All right. Let's see what questions we got here. You think we see some kind of meme coin season? No, I'm sorry. No, I think that's done. But we might see like an occasional meme coin, but not like 2024 style. I'm loving it. All right, we just gotta wait for Powell to start speaking. What is there any bets on what color tie? Back of my chair. What do you mean? I don't get it. Like just hang off it right here? I don't know. That's a little better. Who was it? Was it any of you guys in Miami? Do I see any of you guys in Miami? All right. Now here's the thing. Is this sustainable? This green Bitcoin's already starting to like leg down. Probably look to maybe stop out at break even. Let's see. Oh, oh well. Here, what do we got here? Wiz, the people have spoken, and we gotta do a weekly wisdom ski trip where we do trading education between skiing and good food. Ooh, that's not the worst idea. What do you think? We should do like a weekly wisdom, like like take over like a dude ranch or like yeah, maybe a ski resort or something, and just we do like a couple seminars, talk markets, trading. We have my whole team out. It's not the worst idea. Maybe we could do like a small version and then um and do that. That could be a good idea. Am I coming to Dubai? Oh yes, because we're gonna have the wrecked invitational and I gotta defend my golf title. So for token. So I'll be in Dubai for token. I got bet if he says good afternoon or not. Okay. Yeah, we should have some poly market bets on this. Let's see. What does poly market have? Let's take a look at poly market mention markets. What's he gonna say? Let's take a look here. Okay. All right. How do we pull up Powell? Anything we can pull up like that? Oh, here we go. Okay. Do we have any good positions here? Let's see. here. Can you hear what's the background music here? Like, let me know if you can hear the background music of that. I don't dislike meme coins. I love meme coins. Why would you say that? No, but can you hear the background music of this? Like if Powell starts speaking, maybe I'll just run it off here. Oh, you can't hear the music? Okay, so it's just in my ears. Okay, okay, okay. ETH is doing really good, by the way. I'm pretty bullish on ETH over here. How many minutes we got? We got 10 minutes left till Power jumps on. Let's go, baby. Game on. All right, we got full. I think Bitcoin pulled back fully. Stocks are still up. Gold still up. Let's look at rates. Rates are still moving down. Dude, big crypto is just not able to hold anything. Any green is just I don't know. I was talking with Mando earlier on the stream. I mean, I still think we're gonna hit yeah, we're gonna hit this 80K retest again at some point. Like at least 83 to 80K, 77K ideally. Um, I don't know when. Like this is just sideways chop. It's dangerous on like a downtrend. I mean, right now the long we have is a pure scalp. Like, by no means am I going all in here. Just FYI, we just have a long option scalp trade. Because if any of this stocks and gold dump, like this is just gonna get obliterated, obliterated. Yeah, Nasdaq still red on the day. Actually, flat on the day. Basically flat on the day. All right, what do we think? Is there any color bets here? Okay, inflation 40 times, inflation 50 times, 60 times. Percent tariff, layoffs. Is he gonna say the word layoff? Yeah, I'd probably bet on that. Dissenter, Trump. This is interesting. He never usually uses Trump's name by. He just says president. He never says Trump. Maybe he says that we did have two dissents. This could be a trade right here. Long on dissenter or dissent. I don't know. Crypto has moved to a focus on equity. Business is built on blockchain. Lots of companies. Yeah, I agree. That's pretty fair. How do you get rid of this little thing in thingamajig here? Oh, I don't know how to get rid of this thing that says "See you in Weekly Wisdom." Whatever. If you guys are not on Weekly Wisdom, make sure you guys join Weekly Wisdom. WeeklyWisdom.com. This is the spot to be. I guarantee it. This is our newsletter, our community, our trading community. I mean, it is as good as it gets. All right, we're almost time. We have 7 more minutes, and it's going to be fireworks. I'm excited. Okay, let me see what they're saying in the Telegram right now. Any questions? Okay, you can't hear background music. Okay. Someone said I don't trust Wiz at a dude ranch. That's fair. That's actually the most fair statement yet. But us all for like a ski trip could be like really fun. Yeah, I think North America would be cheaper. I think people want to do Europe. I think North America would be way cheaper, but is it in Europe? I don't know. Or hotels more expensive? I don't know. Maybe we can run up a poll. Maybe there's like cheap ones out there. Uh, Honestly, this is the best statement I've heard today. I'm just saying that's a fair point. That's a fair point. European ski trip and conference, weekly wisdom, first conference. Uh, should we do in America or should we do in Europe? I think New York actually makes a lot of sense. Just saying, even though ski trip would be more fun, maybe for first time. I don't know. I don't know where more subscribers are. I know we have a lot in Europe too, but is it more Europe or is it more in Bihar, in India? I don't think we have that big of a. Maybe nice to have a community there. Maybe I'll make a stop and yeah, you see this number go up? That's funny. Cool to see these numbers go up. This thing went down the center because I think it'll say descent, not the center. AI 3 times? That's too much. It's not much volume on these. I'm surprised. Yeah, Tahoe could be that could be a move. That could be a real move. But I don't know. It's so that's the thing. Like all these are like high end places. You have to find like a ski resort that's like in like a cheap area with like decent direct flights from all over. Like Canada, Canadian ski resorts, like they're pretty cheap. And Canadian dollar is down too, so that could help everyone. All right, we got 4 minutes. 4 minutes to game time. Okay. All right. All right. All right. Let's see. Almost time. 3 minutes. 3 minutes. Just looking at the Telegram chat. Anything in there? Anything in there? Let's see. Dun, 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 dun. Come on. Make it happen, partner. All right. What do we think? Purple tie? Green tie? What do we got here? All right. Let's get it on. Okay. Fed conference live. Okay, can you guys hear now the background music? Oh, hell yeah. Damn, that's awesome. That music going. It's that pump music. Pump it up, pump it up. Come on. All right, let's go back to markets. All right, we're down. We're probably at break even on our long Bitcoin. That's no fun. That's no fun at all. Okay. Okay, so what I'll do is I'll put a stop soon. And because the goal was to dump it before he starts. Oh wow, everything has unwinded the entire pump. Wow, dangerous, scary. All right, we're basically slightly below break even. It was just a fun little scalp trade. Let's see, maybe we'll let it run. If we get like a random green candle, we'll probably just hold into it. All right, purple tie. What do we think? Purple tie. Let's run it up. Okay, let's see. Here we go. Here we go. Okay, we're just gonna let that run. Let's say, come on, Powell. Give me a green tie. Oh, red Christmas tie. But it can't be a red tie. Oh my god, I'll start crying. Purple tie, okay, okay.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices
You
for
guys hear?
the American people. Federal government data for the past couple of months have yet to be released. Available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak.
Okay.
The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that
bullish
GDP will rise 1.7% this year and 2.3%.
He's bullish on the economy.
Somewhat stronger than projected in September. In the labor market,
Alongs are printing.
Employment data for October and November are delayed. Available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up.
He thinks inflation is going up. But market's pumping, that's good.
Inflation appears to be continuing for services.
Not gonna fight it.
Near-term measures of
Our
inflation
longs are printing.
expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures.
Inflation's dropping
Those
overall.
measures of
That's
longer-term
good.
Expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices.
Come on,
for the
pump it,
American
pump it.
people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived.
Ooh, that's bullish.
A one-time shift in the price.
Tariffs are going to be short-lived.
To make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks.
Yeah, for sure. He thinks inflation. He did say core CPI went up a little bit, but overall, he's more worried about job market, labor market, which means second dual mandate, which means more cuts. But then dot plot you think would be better.
At the end of 2026 and 3.1% at the end of 2027.
2.5 for sure.
From September.
2 is they'd have to be pushing it.
As was the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decision
this is important.
by meeting basis.
More worried about jobs than
Let me
inflation.
turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Howard Schneider with Reuters. Just first turning to this.
I agree with this 100%.
Just to be clear, we're on the same page here. The
Here we go, Q&A.
Considering the extended timing of additional adjustments, does that indicate that the Fed is now
Wow. Look at this interest rate move. Came back up. Come on. Push.
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity?
This is interesting. Bitcoin's kind of holding now. Stocks are short-term eating it. But this big move in rates, it just swung back up. Gold, full reversal.
It's partly that consumer spending.
It's getting a little hawkish.
And to another degree, it is.
Yeah, I agree with that take.
Spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. He actually
he's not really looking to cut much next year, so we'll have to wait till
2026.
the new Fed.
2025, so it would really be 1.9 and 2.9.
Yeah, probably later.
Yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Thank you, Mr. Chairman. Taking questions here.
Kind of holding, eh? Market's holding for the most part.
Rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here? And
Good question.
Have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September. We cut now 3. We got a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
Hey, let me just follow up on
He doesn't aggressively want to cut anymore. Seems like.
a big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. Just also, I think productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically
Very interesting. I mean, he's not. I would say he's flat, but I think market was pricing in like so hawkish. He's not coming as hawkish as the market price, which is why you're seeing green candles.
It wasn't just the two official dissents against the cut, but there were also soft dissents from four.
No, this is what it is. He's still bearish, but he's not as bearish as the market price. That's why you're seeing the market move up at the short term right now.
And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned,
Like it's all relative, and that's important to understand.
The situation is that our two goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and we want it to come down.
Ooh,
and
who's
agrees
this?
that the labor market has softened and that there's
Who's this asking questions?
Everyone agrees on that. Where the difference is how do you weight those risks and what is your forecast?
She's pumping her bags.
And where do you ultimately, where do you think the bigger risk is? And it's very unusual to have persistent tension between the two parts of the mandate. And when you do, this is what you see. And I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views. And we come together and we reach
I mean,
a place where we can make a decision. We made a decision today. We had 9 out of 12.
Well, I mean, base case is still bearish. We were just looking for a scalp long. That's all. I mean, we're not hitting 108, 120K. Just FYI, doesn't matter how bullish Powell gets. Be nice to get a 98K, but yeah, remember base case is still bearish. But I'm hoping for a 98K on BTC. But I think 37 to 3,800 on ETH is more likely.
Position to wait to see how the economy evolves. We'll just have to see, and we will get, as you know, quite a bit of data. I should mention on the data.
He just doesn't have enough data as well because we had so much data missed.
We're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile but distorted, and that's really because data was not collected in October and half of November. So we're going to get data.
I wonder if that's kind of a gambit that the Trump admin played, is like, don't give him enough data, so he just cuts anyways. Interesting. Little conspiracy theory.
For example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I would say, again, these are good, thoughtful, respectful discussions. And you hear people say, and you hear many outside say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions. And we always hope that the data
Just
will
chop.
give us a
Nothing
clear
nothing
read.
new.
But in this situation, you have competing. If you look through the SEP, you'll see that
I'm gonna look
large
too.
number
Yeah,
of
there's
participants
nothing.
agree that risks
It's
are
like the
to the
same
upside
shit.
for
He's just saying the
unemployment
same
and to
shit.
the upside for inflation. So what do? You've got one tool. You can't do two things at once. So
Same
pace you move,
shit.
what size moves do you make and that kind of thing, and what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
All right, give us some good questions.
Chair Bell, there's been some discussion recently in the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
What? Why would you ask that?
Um,
He's asking, are you going to hike rates possibly?
That's the next thing, is anybody's base case at this point, and I'm not hearing that. What you see is some people feel
This guy's short
we should
as
stop
fuck.
here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year, but when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3 is not a big data set, but you are right about those 3 cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see,
He is worried about the labor market, clearly.
Evidence of it all. At the same
For
time,
sure.
policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation. And as tariffs come through, as they flow through, that will show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Thanks.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there won't be a cut now, there'll be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead?
No, give us both cuts. What is she asking?
In October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple of things. First of all, gradual cooling in the labor market has continued. Unemployment.
He's worried about labor market. There's no doubt about it.
Payroll jobs,
Look at that. Stocks pumping on that. Look at.
Since April.
Come on, Bitcoin. The stocks about the.
In these numbers by about 67,000. So that would be.
He's definitely. His focus is more labor market now than inflation. There's no doubt about it. He said this a few times, labor market, but he thinks it's kind of stable, but he still thinks it could get a little worse.
It has continued to cool gradually, maybe just a touch more gradually than we thought.
Oh, you think it got worse more than he expected? That's why stocks are pumping. That's dovish. Means he's more focused on the second part of his dual mandate. Yeah, stocks are pumping on that.
Services inflation coming down, and that's offset by increases in goods. And that goods inflation is entirely in sectors where there are tariffs. So that does build on the story. And so far, it's only a story that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic, heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy.
Let's go. Come on, break out.
Phillips curve kind of inflation.
It was a short-term pump to 98, even 94, 94 and a half. I'm good. Just need a scalp. Like, give me, like, this would be ideal. Give me 98K and then send it down to 80K. I'll even take this, like this range right here. Come on, give me something, baby. Stop the count. Stop the count. Don't have him talk anymore. Stop the count.
Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come.
God, what a difference. Look at this.
We were absolutely there
between
to take the actions that we said we would take. So, those actions are
Bitcoin and stocks. What a difference, huh? Unreal.
That is completely separate from monetary policy.
It's not important. I would prefer it not happen, but it'll probably happen because of that. But it's not important at all. I hope we just keep going up, but that's unfortunately not how the market works. Yeah, it's holiday season. There's not going to be much volume regardless. Like, everyone's mostly done for the holidays. Until they come back, there's not going to be no major portfolio changes are happening between today and end of the year. 60K is too much. It'll take a lot to get to 60K. 77 to 80K was my call. We got to 80K. Maybe we get to 77 or retest of 80. Let's see what else he's saying.
It's also happening in the context of a temporary few months front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference for an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we don't think that we help matters by trying to engage as a public discussion. I'll give you a mulligan.
No, thanks. Yeah, I don't know if that means I get three questions, but
just one more.
I guess I wanted to come back to the 1990s question, and do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2000 and was it 19 where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our two goals. And so that's just unique in my time at the Fed. And I think coming back a long ways, we haven't had that in our framework. Our framework, as you know, says that when that's the case,
I sold it.
Take a balance.
I sold the phone. The painting's still here, but I sold a punk for like a couple $100K profit. I'll
That's
take
very
it in a bear market. That's a win.
analysis, really. It just tells you you've got I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat?
So with tariff inflation, there's the announcement of a tariff, and then there's they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of it may take quite a while for an individual tariff to
Yeah,
take
I feel a lot of my stables are that way.
that effect. Then the question is, isn't it just a one-time price increase? So we actually look at
Yeah, repost the stream, guys. Come on.
and what you get from all that, you see sort of for each one of them.
Holding ETH for most of it, yeah.
So if there were no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements.
Yeah, we'll give away after
From goods
FOMC.
should peak in the first quarter or so, right, or roughly.
Dude, this is a nice 4-hour candle on stocks, though.
Call it the first quarter or so. of next
Shit
year
one
should
on
be the
crypto,
peak.
but
And from here, it should
like you would
be-
think
it shouldn't be big. It should be.
we should retest at least this.
We don't really have precision on this, but and after that, again, if there are no new tariffs,
Just choppa, 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 choppa. Choppa, choppa, choppa. Look at that. You could have been gone for like 2 weeks and come back to basically the same price. That's insane.
A new Fed chairman, does that hinder your current job right now?
Thank you. Appreciate
Or
that.
change your thinking at all? No mulligans for it.
No mulligans. Hey, golf
10-year rates have
statement.
50 basis points higher than when you start cutting back.
That should have been one of the things in here.
The yield curve basically has been steepening.
Mulligan.
Why do you think that continuing?
That would have
to
been pretty
now,
funny.
especially in the absence of data, is going to bring down the yield on
Let's
the
see.
thing that will move
Would we have won anything?
the most?
So we're looking at the real economy and focusing.
Well,
on
the
that.
under
You've got
on
when
this.
the long bonds move around. You've got to look at why.
What's he? How many times has he said inflation now? I don't even know.
Compensation, it's very convenient. That's one part of it is inflation compensation.
Again,
break-evens.
inflation.
And they're very
Maybe that
comfortable
was a good
levels.
bet.
They're levels consistent. Once you get out past the very short term now, break evens are at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be an expectation of higher growth or something like that. That's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So
Nothing really happening, boys.
the
Nothing crazy.
network of contexts in the U.S. economy, which is really unmatched.
Like 92,
So
350, 400 around there.
people are experiencing.
I'll probably put a stop out at break even, honestly, at this point. We're just gonna chop. I don't see.
Inflation. A lot of that is just embedded higher costs due to higher inflation in 2022 and 23. So That's what's going on. And so
Gold's
that's
pumping
the-
again. What a reversal
is
on
for
gold.
inflation to
Look at
to
that.
its 2%.
That would have been a good trade. We should have long gold on that dip. Damn.
Real wages are going up.
Even, oh my
People are
God,
getting
gold
jobs and
rocket.
earning money. And we're going to need to have some years where real compensation is higher, it's positive, significantly positive. So nominal wages are higher than inflation for people to start feeling good about affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria. Hi, Victoria Guido with Wizdom. Just to follow up on that, I mean, this is now the third time that you cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care.
Oh,
about that.
labor market has significant downside risk. Dude, he's legit worried about the labor market.
The story with inflation.
I mean, that's bullish to me.
Well,
That means he's like looking to cut again January for sure. He's less worried about inflation. He's more worried about,
in the low twos, right?
yeah.
So it's really tariffs.
Yeah.
That's causing the most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be
That's why market stocks are pumping.
one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and the risks to both sides.
Oh, yeah,
the risks
in
to the
May.
path. If it was just inflation and the labor market was just really strong, then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey, and there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think.
There we go.
And it will be corrected.
There we go. Let's go.
And that's just, I think forecasters
Maybe
understand that. So,
late summer, maybe. I don't know.
So 40,000 jobs
Could be.
20, and, that
Be a
could
while.
go on by 10 or
But
15.
oh my God, look at gold. Look at that rocket.
The thing is, that's job creation.
98K is my angle.
Labor supply has also
Look at that. Our longs are printing, boys. Bitcoin longs printing.
There's just no.
Let's go. Let's fucking go. Pump it up. Pump it up. Let's go. Bitcoin longs printing. There we go. On stream, baby. Every time we on stream, we make money. That's what it's about. Weekly Wisdom. Now imagine if you were in weeklywisdom.com, how much more you'd be printing. On stream, you're printing. Let's see how much I'm up.
cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big
Let's
part
go,
of the story
baby.
yet.
Let's
We don't
go,
know what it will
baby.
be. But for example, if you
Nice.
look at, you can't miss the big
Our calls are appies.
and also
Appies.
companies saying that they're not going to
Appies. Look at that.
That's all clearly happening. At the same time,
All right, take profit whenever you guys want, okay? Whenever you guys want to take profits, take it on the long Bitcoin. I'm going to let my run around a little bit, but you guys can take. Good scalp.
You'd expect
Good scalp.
the continuing claims to go up, and you expect new claims to go up. It really haven't much.
What a scalp,
So
baby.
it's a little
What a
curious.
scalp,
But
baby.
longer term, the question is, what are we going to see here? We don't know, but it's there's a
What a scalp, baby.
in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think,
All right, remember what I said. Whenever you want, take your profits.
in the past, there's always been more work and higher productivity, and incomes have risen. What will happen?
Well, if you come in late and you don't get in on the trade, you just gotta wait. You can't just long randomly, willy-nilly. Remember that. You get in the level we got in at. We were there several times, so you gotta be patient for future. It's a different story.
Between the policy on the committee. Thank you. Why is there such a division of
Uppies.
views between presidents
Give me
and the board members?
uppies.
It's not so stark as that. The
Look at
views
that.
are
Exactly
more
how we played it out. This would drop, 2-year rates would drop, stocks would pump, gold would pump, and Bitcoin rocket. Again, remember, it's just a scalp trade. Does not invalidate my long-term thesis.
And just to follow up, given your growth upgrade,
Uppies.
how would you factor in what would be the
Beans.
economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So can't really help you there.
Christine.
Uppies. All right, mostly we're done, Fomc.
Thank you, Chair Pop. Christine Romans, NBC News.
As long as you don't ask anything like stupid. Look at that pump.
Spending right now.
Pump it up, pump it up, pump it up, pump it up.
Really struggling.
Pump
with
it
the
up,
accumulation
pump
of
it up.
5 years now of rising prices. It's price levels, not really the inflation rate.
Up, up and away.
How sustainable
Superman.
is this shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do through our vast network of contacts and just through our
What a trade.
observations going on in the
Love it.
economy.
Love it when I can print for you guys. Means a lot.
If you
Remember, weeklywisdom.com. Here. Sign up here. You have to. You absolutely have to. You've seen on stream. We're printing. In here, there's 10 of me. And we all cooking.
Changing products that they buy, buying less, and that sort of thing. And so it's clear.
Honestly, I don't care. We printed our trade. Base case, I think we're still going to go lower. But let's enjoy the pump right now.
They tend to be
Maybe not tomorrow, maybe the day after, but right now, let's enjoy it.
How sustainable
Pump
it
it
is,
up.
I don't know. Most of the consumption does happen by people
How's
who
ETH
have
doing? How's
means.
ETH? Ethereum, cryptocurrency. Let's go, baby. Let's go. Pump it up. Pump it up. Give me that uppies. Okay, whenever you guys want to take profits, okay, go for it. Trade is done for me. You want to take profits, take it. I'm going to let mine ride, but you guys are happy to close out whenever.
We saw that it was 10 years and 8 months or something like that. The longest one.
We're up 30% on our long.
Most
Woo!
of the
Ooh, doggy.
gains were coming
30%.
from the
Damn.
bottom quartile, the low. So, having a strong labor market for a long period of time is really, really good from a social standpoint.
Bump,
It's
bump, bump,
helping
bump,
people
it
to
up.
lower income.
Don't get greedy.
That's what we all want to get back to.
Don't
We
get
got price
greedy.
stability, and we got
Let's see what else is he saying.
Full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak with these rate cuts that we've seen. Is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? The average age or median age of a first-time homebuyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces
Oh, 94K break. Boom!
And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people.
Dun,
Housing
dun,
supply
dun.
is low. Many people
Pump it up.
very,
Hey, hey, hey,
low,
pump it up.
low
How many
rate
people we got on
mortgages
stream?
period, and they kept refinancing.
How many people here watching me act a fool, but printing money?
And we're ways away from.
Okay, make sure weeklywisdom.com. It's important. All of you who made money today on stream, go subscribe.
Estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Thanks, Chris Rugaber, Associated Press.
Wow,
You
they're still
mentioned
going.
inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling in your view.
Okay,
At the same
I
time,
closed
you
my
have
scalp,
inflation
most of it. I'm good. Good trade on stream. That's all I care about. Making you guys money.
Well, I think the risk.
I'm comfy now. I'm
inflation
comfy.
is pretty clear to see, and that is.
I think we'll go a little bit higher, but that's okay. Made our money. I left a little bit of a moon bag.
As I mentioned, most of the inflation.
Give me a little bit higher, but I'm good.
We estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected.
We printing. Look at that. Look at that. Uppies. Uppies. Look at that. Uppies. Ah, what a call. That's why they call me the fucking Wizard of Soho.
Just keep doing that, so you'll see.
Uppies.
I think the other possibility is less likely, and that is just that if the labor market gets tight or the economy gets
I'm gonna start closing out my trade, and we're comfy.
just traditional.
All right, I think we've been on stream for a while. I think we're good.
So, yeah,
We're good for this FOMC stream or what?
all across the committee.
Hey man, you do what you got to do.
The picture pretty similar.
But I think that's good enough for today's stream. We made everyone money. Been on here for almost 2 hours. Let's call it.
You got to make an assessment, and this is the assessment we made.
All right, that's good. I think the conference is mostly done. Let's wrap it up. Let's do a little giveaway. What do we think? A little giveaway. Let's get some yeet action. Yeet it already. All right, let's get some yeet action. Let's see how this works. Hold on, let me just log in. All right, let's get. How do I get rid of this little thing? This little thing that says "See you in weekly wisdom." I need to get rid of that. I don't know how to do it. Okay, yeet it already. All right, let's do it. Let's give some money. All right, it's been a great stream. So let's give some money away. I'm out of all my trades. Just FYI, closed up the Bitcoin long. To give. Sorry, I'm just talking in our weekly wisdom chat. Always the highest priority for me. Okay, here we go. All right, close everything. Let's have some fun. Good day. Good day. Okay, let's see. Where's Yeet Casino? Okay, let's see. We got some TV running in the back. All right, let's see. All right, lamb chop. Should we start with some lamb chop? Have some fun. Gamble time. Let's Okay, let's go to the tracks. Okay, 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 okay. Strong with time. Let's get tracks. Let's double down. Let's double down. Let's go. Tracks, baby. Give me tracks. Okay, not great, guys. Not great. Okay. Oh, maybe we got the tracks. Oh, okay. This is not working out. All right, what do you think? A little blackjack action, or let's do slots. We gotta win something to give away. All right, let's do this. Yeet it already. Okay, we're gonna switch it. Switch to yeet hand. Okay, let's show some love to the boys of yeet. All right, let's fucking run it. Here we go. All right. Okay. All right, let's fucking do something big. Okay. Let's do this. Okay. All right, let's run it. Let's go. Pew 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 pew. Yeet it already. Come on, baby. Give my people some money. What? 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 We got we got screwed, boys. All right. We gotta. All right, let's go back. Let's go do some blackjack. Oh my god, I'm gonna lose all the money I made trading today. Oh, I got robbed. All right. Let's go. Let's go. Blackjack. 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 Let's go. Evolution blackjack. Yeah, Mando. Mando saw me winning because he shorted on stream. He's like, we cannot let him win. All right, let's go. Little VIP action. Here we go. How the fuck did that happen? Is a good point. I have no idea. Yeet it already. Hold on a sec. I'm gonna see something. Okay, I'm trying to get rid of the comment thing. I don't know how to do it. Oh, you can see. Oh, this is cool. You can see kind of comments like building up over here. Oh, that's interesting. Huh. Okay. All right. Good to know. All right. What happened here? I thought you were about to jump on. Blackjack. Okay. Come on. Come on. Yeah, blackjack has worked okay for us. I don't wanna. I don't wanna jinx it. All right. Let's play. Here we go. All right. Let's do this. Go big or go home. What? What just happened? Oh my god. Okay. All right. I guess we're sitting here, boys. All right. Let's go. All right. Let's go. Okay. We're gonna be good. We're gonna be good here. Oh boy. Oh boy. Oh, let's go. Let's go. All right. All right. All right. All right. All right. Mm-hmm. 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 Uppies. Deal it, baby. Deal it. Damn. Oh yeah, we hit her. Well now send it, boys. Send it. Come on. Give it to daddy. Give it to daddy. Give it to daddy. Give it to daddy. Let's go. Let's go. The fucking king, baby. See, Mando can't fuck with us over here. That's why we're good. That's why we're good. Bro, I just played the new lamb chop and got raped. It was the worst. Referral, it's with Wizard of Soho. Come on. Face guard, face guard, face guard, face guard. Ugh. Alright, let's go do alright. Yeah, we got Farouk here. He wants to play lamb chop, so let's do lamb chop. Let's do some big boy lamb chop. Let me just make sure if he wants to get on stream or not. Wait, let's just. How's the market doing, real quick? Real quick. Okay. All right, that was a good sell by us. Good sell. Okay. Wait, what's Omaha flip? I don't know what that is. Okay, let's play it. Hold on. Let's do one more round of this. All right, let's go. Come on. Oh, double. This might be it, eh? Let's run it. Fuck it. Oh, oh, oh my God! Whoa, 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 whoa! What do I do now? What do I do now? Free. I gotta go, right? Oh, Farouk, you fucking called it. What do I do, boys? What do I do? I've been given 3 times the guy saved my ass. We gotta go for it, right? I think we gotta go for it. What does everybody think? We gotta go for the barn. Let's go! Let's fucking go! Let's fucking go! Let's go! Let's go, baby! Let's go. This is gonna get clipped. Oh, I gotta save this. I gotta screenshot this. Take a picture on my phone. Oh my god. Oh my god. Let's go. Let's go. What a cook. What an absolute cook. Boys, we fucking did it. This is the first one. The first barn win. Shout out to Farouk. Made me jump on jump on lamb chop. Oh my god, Farouk with the call. What a legendary call. Let's go, baby. This is why this guy's gonna make billions for everyone on myriad markets. Yeah, that's it. We can't yeah, fuck Mando, fuck KBM. This was the best win yet. Alright, I'm not gonna mess with this anymore. We got our win. Let's do what's the thing you just said? What's Omaha flip? I don't know what that is. Okay, okay. Where'd it go? Okay, hold on. Omaha flip. Okay. Let's go. Alright, we'll play one. I just want to see what this says. And then I'm done for that. Okay. Both you and the dealer get 4 whole cards in Omaha. You must use 2 of your 4 whole cards. Okay. Okay. Regular. Okay, let's see. Let's go. Let's go battle mode. Okay. Is that how this works? I don't know. No idea. Oh, okay. It's just poker? Oh, that's why Ben Lamb made this game, right? Okay, flip a card. Okay. So I have to flip everything or can I just stop? So what happened? Did I get wrecked? I can't even tell. All right, let's do it one more time. Oh, you got flip. Oh, okay, okay, okay. Ooh, high card. Let's go. Let's go. Let's go. Oh! Oh, so this is big, right? I won. All right. Okay, okay, okay. Okay, I got a feel of it. Okay, okay. Oh, okay. Got it, got it. 2 pairs. Okay, let's size up a little bit. Oh shit, nice win. Okay, let's size up. How do I go back to modified bet? Here we go. Okay, let's do this. Um Okay, here we go. Let's have a little fun. Okay. Okay, so I gotta beat that. Okay, there we go. Fuck yeah. Oh my god, what the fuck? Bro! Oh my god, what just happened? Holy shit. What the fuck is yo, Farouk, you cannot leave. Yo, we're betting here till like oh my god, Farouk, you absolutely cannot leave. Farouk is my good luck charm, 100%. He always has been. Oh my god, we're cooking. Holy shit, Farouk, you gotta stay on stream. What? Wait, that's it, right? I won again. Bro, what is happening right now? I'm tripping out. Bro, we are with 1 card, we won. Okay, Farouk, you are now leaving. Farouk, drinks are on me next time. Hong Kong, I see you. Drinks are on me, brother. Oh my god, we're cooking. Holy shit. Ben Lamb's probably so mad. Alright, if you lose, we'll just stop. We'll give some money away. Let's do that. Ooh, we got chance. Okay, here we go. A little even. Oh, okay, all right. Oh, oh, we won. Not a lot, but yo, we still won. Yeah, might be a good poker player. Bro, we have not lost since Farouk came on stream. This is actually insane. This gotta be, yeah, this gotta be clipped up. We gotta send this to Ben Lamb. All right, all right, all right. That's okay. Yeah, that's okay. All right, all right. That's okay. All right, that's okay. Not a big deal. This is actually insane. I've never played this before. It's actually fun. Ooh, who cares? Ooh, we won again. Damn. What the fuck? Yo, where's Ben Lamb at? Let's play poker, Ben Lamb. Let's fucking go, baby. I'm ready. Ready to take your ass. They call me the poker king. They call me the wizard of poker. Let's go, baby. Someone call him. Tag Ben Lamb. Let's go. Okay, okay, okay. We got high card. Oh shit. We won again. Bro, why didn't we size up? We should have sized up like 10 G's at this point. I don't know. I don't want to mess with the odds. Bro, we've really not lost since Pharrell came on. This is insane. Someone tag Ben Lamb, bro. I'm the fucking poker king now, bro. All right, here we go. Oh shit, this one's gonna be tough. Okay, okay. All right, that's okay. That's okay. We had to lose once. Damn, I feel like we should do one more slots. I feel like while Farouk is here, we should definitely run up a slot. We were not winning any slots before. All right, we're losing at this now. Let's run up a slots while Farouk is here. Farouk, what's your slots? What do you like? What slots do you like to play? I mean, we were getting Christmas slot. Okay, okay. Which one's the Christmas slot? Christmas. Let's see. Christmas morning, Christmas bash, secrets of Christmas, Christmas jackpot. Let's do that. All right, yeah, let's do something happy. All right, let's do this. Oh, what kind of? I don't understand. What kind of slots is this? I don't understand this one. Um, where? Yeah, let's bet some real money. Come on. Oh, you don't like this, Farouk? Okay, okay, okay. Let's do something else. Where slots? Come on. Let's go. Slots. Let's go. What we got? Oh, no, go. What we got? What we got? What we got? What do we got? We got to turn the TV off over here. What do we got? What do we got? All right. What do you think, Farouk? Play Le Santa. Christmas Big Bass Bonanza. Santa Sleigh. Okay, hold on. I don't know. What do you think? I'll go with whatever Farouk says. Big Bass Bonanza, right? Let's do that. Okay. This sounds crazy. Okay, let's see. Okay, I don't know how this works. Okay, here we go. Okay, okay, let's do that. Oh shit, no, maybe $100. Okay, let's do that. Okay, okay, not too much slots, Farouk said. So we're not gonna we're not gonna mess with this. Okay, just one more try and then we're done. Oh shit. Damn. Okay. All right. We keep going till we lose. Okay. Hold on a sec. How did we buy? Oh, 8,000. No, I don't really know how slots works. Never. I'm not like a big slots guy. All right. It's not really working. Also, why is KBM space over here? Yeah, I'm gonna round trip it. Okay, let's give some money away. We're done for the day. Farouk came in clutch. Um, so let's give some money away. We made a couple $1,000s. Let's give some Myriad people money away. Myriad fam members, Farouk fan club. Put your names down. Go give a shout out to Farouk, to Myriad. Go bet on Myriad. That's the best, absolute best prediction markets. Go farm your points. There's gonna be a mega airdrop. But yeah, put your names down. And then whoever Farouk wants me to give some money away to, I'm happy to. All right, I'm just gonna give to a couple people who are active. If you were, well, what just happened here? If you were active in the chat, I will give you some money away right now. Okay, tip. Okay. 7. Oh, yeah. So if I saw you retweeted or you were active in the chat, I'm gonna send some money away to all you guys. Okay. Okay, Jan Welt, yeah, you were active. I will send you some. Jan Welt. 150. All right, let's see who else was active in here. Okay, this guy. What's your Manny? What's your username on Yeet? Whoever I saw in this chat active today, I'm gonna give to you guys. So I'm just looking up over here. If I saw your name come up, okay, you. Okay, what's your name? Okay, Manny. I'm gonna send you a tip, Manny. Okay. Okay, and then okay. Wow, why is your name so long? Okay, let's make sure we do this right. Harry Potter from Ohio. I like that name. Okay, 150. 150. Okay. Did I not do that right? It is Manny, bro. What did I do? All right, Pigeon, what's yours? What's your username? Okay, as he said. Thank you, Farouk. I appreciate you, man. Have a good day, brother. Okay, hold on. Okay. He wants to give to YZMOT. Okay, that's fine. Okay. Okay, let's see who else. I'm just going through all the comments and just seeing whoever was talking. Is this person still around? Mommy Tokyo. Oh wow, we got 8,000 people on here. Okay, I'm gonna give some to Mommy Tokyo. Mm, yeah. Pigeon, what's yours? I'm gonna send you some too. Mommy Tokyo. Send yours, Pigeon. You've been on the stream the whole. Oh, I mean, you can use a little sauce. I thought you were, your computer showed you were somewhere else. Uh, think about it. I mean, I thought you were not in the Netherlands. I'm trying to wink without the shade, but okay. Who else? Who else we got here? All right, I'm gonna give 2 more people, and that's it. I'm done for the day. Been streaming for like 4 hours between Mando's stream and you guys stream. Okay, we'll give this guy. All right, Pigeon. Who else you want to give? You got anybody else in mind? Let the Pigeon. You can pick. Monica Kaja. I think I got that right. Okay. Pigeon. If you got anybody you want to give. Okay. No worries, brother. Okay. All right. You're the last one. Oh, this didn't work. Monica. Aj. Okay, sorry. I got Aj. Okay. Okay. Here you go. The Alpha 09. Okay, you're the last one for today. There you go, bro. All right, that was a great stream, great times. Make sure you guys go subscribe to weeklywisdom.com. We're gonna be there rest of the day trading. It's gonna be great. Good. Not comfy. Okay, I'll do one more. I know you're always supporting. Not comfy. All right, last one. All right, that is it. But because I know you support a lot. Okay, weeklywisdom.com. Make sure you guys go subscribe. Until the next stream. Cheers and have a great day.